Hi guys, good morning. Hope you're all doing well and you're all trading well. Today I'm going to talk about why 90% of all traders fail. Statistics say that about 90% of all traders fail trying to trade the forex, the stocks, or any form of market, and only about 10% of these um, traders make a successful trader and take day trading as their full-time profession. So, what's the main reason why most people attempt the market and fail? What is the wrong thing that they do that makes them fail? And you all know that if you're doing something over and over again and you are not seeing any results, then it means you are doing it in the wrong way or you are looking for the answers at wrong places. So let's go to the slides and let me explain to you what you need to know, okay, to become a profitable trader. I'm going to take you through step by step all the things you need to know to be able to become a profitable trader so that you join the top 10%, okay? Trading involves 5 main important things. You must have a very good strategy with an edge. You must have good risk per trade. You must have consistent risk reward. And then you, the trader yourself, you must be consistent. The trader must be consistent. And then we also talk about the mindset and experience of a trader. So these are all the 5 things that you need to master. You need to acquire to become a profitable trader. If you lack any of these skills, you will not become a profitable trader because they must all correlate with each other. They come together to make a whole system to make you a profitable trader. So let's get deep into these 5 important aspects of trading and let me explain to you what you need to do as a trader to join the top 10% to become profitable. The first thing you need to become a profitable trader is a good trading strategy. A trading strategy is a setup that you are going to trade as a trader. It can be any strategy at all because there are countless of strategies out there. You can learn from a book, you can learn from a mentor, or you can analyze the chart yourself and develop your own strategy. Your trading strategy is going to be your bread and butter setup. So you learn and master specific trading setups and learn the different variations of those setups. After you've learned and mastered those chosen strategies, note that you only take a trade. You only take a trade when your setup is ready. If your setup is not ready per your trading strategy, you don't take a trade. You only take a trade when your setup is ready. Your strategy or setup must have good percentage win rate, which means that the win rate is the ratio of the winning trades versus the losing trades. So you must have good strategy that can win more than it loses. So you can learn strategies from anywhere, from books, from mentors, or you can watch some of my previous videos and learn my personal strategies I teach here, okay? These are personal strategies I teach in my webinars. I decided to just start a new channel and just teach you guys here, okay? So you can develop the strategies yourself and you can also learn from someone. But when you're a beginner, it's very hard to develop a strategy yourself because you don't actually know what is good, you don't know what is bad. So better you find a mentor like me and then you learn their strategies and then you master their strategy. And make sure that the strategy also suits your personality and your lifestyle. If you learn a strategy that trades like 4 hours or daily time frame, my guy, when are you going to sit down for one candle to form within a day? You have that patience, you want to quit your job to become a day trader, but you don't have the patience to just sit down for the whole day for just one candle to form. So I think the strategy you are going to learn or the strategy you're going to master must be lower time frames, okay, at least 15 minutes, at least 5 minutes, or H1, maximum H4. Okay, I personally trade H1 and M15, that's all. My whole strategy is about H1 and M15. That's all. And when I come to indices, I sometimes trade the M5, which is 5-minute time frame. So the strategy you're going to learn must fit your personality. Okay, must fit your personality. You can't just sit down and then you wait for just one candle to form for 4 hours or a day or a week. Are you a position trader? You are a day trader, so your strategies must be in lower time frame like H1 or M15 or M5. Okay, so this particular one is also my personal trading strategy. Can you see? These are where my entries are supposed to be. So I have some specific criteria. When they meet, then I hit buy and sell. Can you see this is my personal trade I took? Can you see? It's selected, it's highlighted. Can you see? So it was just about to hit my take profit and then I just snap to show you just for this presentation sake, just for you to also grab the concept I'm going to talk about. So you might develop and master your own trading strategy or you must learn from someone, okay? And make sure that you master the strategy and different variations of those strategies. And that's the only way you can trade a good strategy and become profitable. And make sure every strategy you are trading, it wins more than it loses, okay? You must have very good win rate, okay? The next thing that you need to become a good profitable trader is a good risk reward. You need a good risk-reward ratio to become a profitable trader. Your strategy must have a good risk-reward ratio. The risk-reward ratio is how much you lose per trade, okay, and how much you win per trade. So to become a profitable trader, your risk-reward ratio must correspond with your trading strategy win rate. For instance, let's say if you have a strategy that wins 60% of the time, then your risk-reward ratio of 1:2 will make you very profitable. Assuming you have 1:2 risk-reward ratio, it's going to make you very profitable because you win 60% of the time. So let's calculate. Assuming we make some calculation here, and you risk, let's say you are risking $100, right? Which means anytime you lose $100. Do you understand? And you are making $200, and you're winning 60% of the time. When you calculate, you are definitely going to make money, right? That's what makes a profitable trader. So your risk-reward ratio must correspond with your trading strategy win rate. And as I said earlier, guys, these components must all come together to work together for you to become a profitable trader. Even if one of these components is missing, I can bet you can never become a profitable trader. You will span your wheels and go round and round and round, and you can never become a profitable trader. All these components must work together, like the way systems work. The same thing as trading systems also work. Okay, the same thing. So let's say you want to risk $100 to make $200, which means the risk reward is what? 1:2. Let's say you want to risk $100 to make $300 per trade. The risk reward is what? 1:3. Some people risk 1:4 and 1:5. But the more you take higher profit, the lesser your win rate drops. Okay, the strategy win rate will drop. Okay, so let's say that the average one is 1:2 or 1:3. Mostly I take 1:2, I take 1:3. Sometimes even this personal trade I took. Okay, I always like showing you the personal trade I took so that you also learn and get the grasp and understand what I'm talking about. This is a personal trade I took. I used for one of my charts, and you can see that this I was using actually a small account because some of my students, when you show them big accounts, they get scared. They think because they don't have big account, they cannot make profits. Okay, so I decided to create a small account and trade and snap all my entries and show it to them, so that they can also notice, okay, if they also have small account, they can also make profit. So this particular account is about $3,000 account. So I'm just risking $100, and then anytime I lose, I just lose $100. And if there's a winning trade, at least something twice or more. Can you see? So you can see sometimes the win rate will be a little more than 2, but at least you must always take 1:2. Okay, so your risk reward and your percentage win rate must match. If they don't match, let's say you have percentage win rate of 50% and you are taking 1:1, then you cannot become profitable, which means it's likely for you to lose. Yes, 1:1, you always break even, right? So make sure that you always take at least 1:2 and you have a very good win rate. Okay, and as I said, if you don't have a good strategy, you can learn some of my strategy from my previous video just for free. Okay, just learn them, and then you can also become profitable. The next component you need to become a profitable trader is consistent risk reward. Consistent risk reward is different from the risk reward I was talking about in the previous slide. The previous slide I was talking about risk reward. Either you are risking 1 to make 2. That is per the percentage, okay, per ratio. So maybe I want to risk 1 to make 2. If I risk 1, I make sure I double it. But this I'm talking about the value. So you must have a consistent value of risk reward. Okay, consistent value of risk reward. So let's say you decide to risk $100 of your capital, your trading capital, which means that every trade you're going to take, make sure that you still risk around the same figure, either $100, $105 or $120. Okay, don't risk more than that. You risk only one specific figure dedicated for those trades, and you can only change it after 30 to 50 trades. Okay, you can only change it after 30 to 50 trades. So on certain trades, you may decide to risk $100 to make $200. Okay, on other certain trades, it could be that you're trading different assets that is a little higher. So you still don't risk higher. No, risk something around the same figure, maybe $120 to make maybe $240. Guys, do you understand? Or you might be trading a different asset which is also very lower. So in that scenario, you can risk something like $95 to make $200. Guys, do you understand the scenario? And so your risk should be around the same figure, because if you risk very higher, some people, what they do is that they feel comfortable about a particular trade, then they risk more. Let's assume that every day they were risking $100. Now they say, oh, this trade is going to win. Wow, this trade is going to win. Then they put all their capital on it. Are you a trader? Are you a gambler or a trader? Don't do that, guys. So if you are risking specific amount, make sure you risk specific amount, and you can only change it after you've taken enough trades, at least 20 to 30, 30 or maybe 50 trades. Okay, now I've taken this trade for this particular time. Okay, so now I can change my risk reward. Maybe now you can top up maybe to $200, or you can even change to $300. That one nobody cares. But make sure that anytime you change it, you still stick to the same risk reward until you take enough trade. Okay, until you take enough trade. So don't take $100 risk and then maybe you lose and you say, okay, I want to make the money back, and you take $200 risk and you lose again. You say, I want to make the money back. You take $500 risk. You're thinking you're going to make 1,000, make all the money back. Actually, you are not dreaming to become a gambler. Your whole dream is to become a day trader, right? So follow the specific rules, specific criteria that you have to do to become a day trader. You're not a gambler. So follow specific structure where you trade, okay? Where you trade. So make sure that you always take a sample. Trading is a game of statistics, okay? So your risk reward value, your risk per trade, they must all match, and your win rate, they must all match. These components put together makes you profitable. So if you don't stick to the same risk reward ratio for about 30 to 50 trades, and you change it, you're going to mess the statistics up, and you're not going to see the raw statistics of your trade. Okay, so please don't mess it up, guys. Okay, do you understand me? Don't mess it up. Stick to the same risk reward until you cover enough sample of trades. Okay. The next component that makes you a profitable trader is your trade frequency. The frequency of your trade setup. Okay. So what does it mean? Trade frequency means your trading setup or your trading strategy must be able to generate enough trades per week or within the day. Okay. So you must have at least 1 or 2 trades per day, or at least 4 trades per week, or some trades in a month. Okay. If your trading strategy or your trading setup do not appear frequently, then you are doing a dead business. It's just like running a company or a business with few customers. It will be very, very hard to make profit from such business, right? So as in trading. So you need good amount of trade setup, okay? You need good amount of trade to be able to make enough money from the market. So what is good amount of trade? Well, it depends on your strategy, okay? The time frame you also trade also depends. So assuming your strategy can generate at least 20 to 30 trades per month, then it's a good strategy, okay? And which we can take about 1 or 2 trades within a day, or maybe 3 trades within a day. Okay, so at least your strategy should be able to provide 20 to 30 trades in a month. It shouldn't be less. If it's less, then maybe you're a swing trader or something. And I'm not a fan of swing trading. We are day traders, so we sit down and we take our trades within the day, the month. We calculate our profit and we take your salary from your capital. That's all, guys. Okay. The next important factor is trader consistency. When I say trader consistency, it means that you as a trader, you have to be available to take most of the setups generated by your strategy. Okay, you can't become profitable if you are not available to take any trade. Or if you're not there, you get up from your seat, you go and chill with your girlfriend, or you go out with your friends. Meanwhile, you don't have a specific routine, so the trade setup will come, and you're not there to take them. So if you, the trader yourself, if you're not consistent, you can't become profitable. Right? Can you see how they are all connecting? The strategy must provide enough trade setup, and you, the trader, you must also be there to take those enough setups, because it's like running a business. Let's say you are a business owner and you open your shop or you open your business, and you open it for 2 hours or 1 hour, and then you close it and go and play around. Can you become profitable? Always when customers come, you're not there, right? The same way, if you have a strategy and your strategy setup is ready and you're not there to take the trade, it's like a business owner who have closed a shop. Please, do you know what I'm trying to say? It's a business owner who have closed the shop. So you need to be there every time. Don't get out from your seat. You need to be there every time to take all the trades that are provided by your strategy. Okay, so they become profitable. So you need to have specific schedule. Maybe say, okay, I'm going to trade for 4 hours. I'm going to sit down for the whole day. It depends on the time frame you're trading. So you must have specific schedule where you trade. You take all your trades, and then you must always be there as if you are working. When somebody calls you on the phone or a family member calls you, tell the person I'm at work. That's all. That's your work. Though you're in the house, but that's your work. Okay, I trade from my house, and sometimes in the evening I go for webinars, and sometimes if I have anything else to do with my family, I just go out with them and do. But make sure that always when it's time for me to trade, I'm always in my trading room. Okay, one day I'm going to do a video and show you my trading room, but for now, for security sake, I don't like showing my face often. That's why you don't see my videos. I just like to show you an image. Somebody who find it difficult to spot you by a video, they can easily spot you. Okay, in my community, I don't trust the guys, and I don't want to be showing my face. So you must have enough time to sit on your desk, to take all the necessary trade, okay, to take all the stuff that will be available. Okay guys, do you understand? So be available. So the trades must be available, and you yourself too, you must be available. All these components come together to make you a profitable trader. Even if you miss one of them, you cannot become a profitable trader. It's like the way a machine works, the way a system works. If one component is missing, can the machine work? The machine will malfunction, right? The same happened to trading, guys. This is why a lot of traders are not successful. 90% of traders fail because they don't know what I'm talking about here. All this I'm talking about, I learned them from my own experience, from my sweat. The last time I told you that I struggled for my first year of trading. I was a network engineer and I quit my job to just become a day trader because of some reasons. I will tell you one day in one of my videos, and I struggled. I spun my wheels for a year because I was following the YouTubers and following courses and I didn't know what to do. So all this I'm teaching is from my personal experience that I'm just pouring out here for anyone who is struggling, any struggling trader who is listening to me today, so that the person will also not go through the same thing I went through, okay? And if you have some money, later you can join my webinar. But now if you don't have money, don't worry, just watch the videos, pay attention to the videos I'm teaching you, and you also become profitable, okay? So far we covered a lot. We covered having a good strategy and what it means to have a good strategy. We covered good risk reward. Okay, we understand risk reward, and also consistent risk reward. Do you understand the difference, guys? Remember? Good. We also covered trader consistency just in the previous slide. And the next thing we have to cover is the mindset and experience of a trader. This one is what people call trading psychology. So people call this trading psychology, but trading psychology is very broad, and sometimes people don't understand what actually trading psychology means. I call it the trader mindset and experience. Knowing what you're actually doing is what you call trader mindset and experience. You must know what you're doing to be able to go through what you're supposed to go through. So I will reserve this one in a specific video. So watch out for the next video and then watch that one, okay? That one is a whole lot how to talk about. So if you want to become a profitable trader, guys, don't end here. Watch the next video I'm going to post here, okay? And then take the lesson from it. It's just for your own good, guys. Take the lessons from it and then apply it, and you also become constant trader, okay? And become constantly profitable just from now onwards. And thank God you found this channel. I wish people actually found this channel, but anyway, it's a good channel and people don't actually know the channel. So just like and subscribe. Let's see how far this channel can go and how people will be able to come here and learn the rest what's required to become profitable trader, okay? So I'll leave you here for now. Watch out for the next video. Have a great day.